Alright, so let's get one thing out of the way. I'm very bullish on Palantir over the long term. I currently have 500 shares of this company right now because I think they're currently one of the most unique businesses on the market right now and are in an industry that's going to continue to be in high demand for a long time. Despite this though, the last few months have been a bit negative for these growth companies, including Palantir. Its share price has declined over 50% since the beginning of the year. So as an early growth company, Palantir's investment case still remains somewhat speculative for both Wall Street and a lot of other people. And one of its weakest investment factors, aside from a lot of people still not understanding what kind of company Palantir even is Palantir's profitability. Moreover, due to the current state of the economy, Palantir's growth and profitability have been hurt lately, which has pushed its share price even further down. Despite this though, Palantir has recently said it maintains its growth strategy and is not focused on improving margins in the short term and will continue to focus on managing the business with a long-term mentality. And honestly, even though I'm sure this might be frustrating for a lot of people, I think this shows that Palantir's leaders truly care more about the overall quality of their product and not simply the number of the stock's share price, which in my opinion is a good thing. And I think it also somewhat mirrors Elon Musk's mentality when it comes to his publicly traded company Tesla. So while in the next few months, the market will mainly look at the company's prospects over the coming quarters, for long-term investors like myself, I think it's much more important to look at the big picture and not worry so much about quarter-to-quarter earnings. And as Alex Karp said during the last earnings conference call, management expects the company to be profitable by 2025, which would certainly be a great milestone and a key reason for a higher valuation. So in this video, let's look at Palantir's fundamentals over the next few years and see if its claims for being a profitable company by 2025 have some merit, or if management is just using this argument to distract investors from short-term woes. So let's look at the facts. On the revenue side, Palantir's medium-term goal is to grow its annual revenues by about 30% per year, which, mind you, is a slower rate than it has achieved over the past 3 years. You see, from 2019 to 2021, Palantir's revenues increased from $743 million to more than $1.5 billion last year, which represented an annual growth rate, on average, of about 37%. And this solid growth rate was supported by its government and commercial businesses. And more recently, the commercial segment has actually been the company's major reason for growth and is actually expected to become its largest segment in the future. Overall revenue growth has been supported mainly by a higher customer count, which increased to more than 300 at the end of the last quarter and represented an increase of 80% year over year, a trend that is actually expected to remain strong over the next few years. And strong revenue growth in the recent past and a growing customer base are strong signs that Palantir's growth strategy is progressing pretty well, even though it may be challenging in current times to achieve its annual growth rate of 30%. So over the next 3 years, revenue growth is expected to be about 28% per year and reach about $4 billion in revenue by 2025. However, this represents an annual growth rate of 35% year over year in 2025, which may be kind of hard to achieve. And assuming a more conservative approach, it's estimated that Palantir generates $3.8 billion in revenue by 2025. And to achieve these higher revenues, particularly in the commercial business, Palantir's strategy was to create a sales team, something that it actually didn't have a couple years ago. But despite the recent slowdown in its business, Palantir continues to add salespeople, while a lot of other technology companies are freezing hires or reducing employees to cut costs.
You're fired.
Showing that Palantir continues to be focused on the company's growth over the medium and long term, rather than trying to beat the market estimates in the next quarter. And moreover, Palantir is expected to increase its headcount by about 25% during 2022, which will have them reach around 3,700 employees by the end of the year, compared to about the 2,900 at the end of 2021. And what this means is that staff costs are expected to increase significantly in the short term, and probably at a higher rate than revenue, at least until the company reaches its desired scale and starts to reap the benefits. So even though this will put pressure on the company's business margins in the next few quarters, as Palantir's business gains scale, it will become easier and easier to reach profitability, even though it's more likely to take at least a few years. So overall, this should be the takeaway from everything I've said. While Palantir's business prospects have deteriorated recently due to lower revenue growth than expected, which together with rising costs is hurting profitability, but I think long-term investors should look beyond short-term issues and care more about the company's fundamentals over the next few years. After all, that's kind of the whole point of investing, finding companies that you really like, putting money in, and holding for a few years. Palantir continues to focus on business growth, and management doesn't seem too worried about these short-term downsides, which I think is the right approach, and management clearly shows that it has a long-term view, just like I do. So overall, Palantir is on the right track to grow its business and reach profitability over the next few years, I think, which will no doubt be a great milestone and justify a higher valuation than it currently has. And I think I'd like to wrap up the video here, guys. Thanks as always, and I'll catch you next time.